Gold hit around 1,82,000 for 10 grams in January 2026. Today, it's sitting at around 1,40,000. That's a 22% correction. And here's what I want to tell you. This is your moment. The latest Economic Times report of 29th of June 2026 tells us two very important stories happening at the same time. Story number one, gold prices have corrected sharply from a peak of rupees 1,82,000 per 10 grams in January 2026. Gold is now trading around 1,40,000. That is a fall of 22% in just 5 months. Why? Because the US Federal Reserve signaled that interest rates could stay higher for longer. West Asia tensions eased and the market reacted. Story number two, Indian households are panicking. Nearly 50 tons of old gold that was sold in just the April-June quarter alone. That's 43% more than last year. People are rushing to cash out, fearing gold may crash further to 1,20,000. Now, here's the question I want you to sit with. When everyone is selling, should a smart investor be selling too, or should they be buying? Friends, let me give you some perspective. Gold is not just jewelry, it is a global store of value. It has protected wealth through wars, recessions, inflation, and currency crisis for thousands of years. Yes, gold has corrected. Yes, people are fearful. But remember this golden rule of investing. Be fearful when others are greedy and be greedy when others are fearful. A 22% correction in gold is not a reason to run away. It's a buying opportunity, but only if you invest the right way. And that brings me to the most important part of this video. Here is my personal advice as a personal finance professional. Do not buy gold in a lump sum. I repeat, do not invest everything at once. Why? Because nobody, not me, not the best analyst on Wall Street, can tell you exactly where gold will bottom out. It could go to 1,30,000. It could go to 1,20,000. We simply don't know. So what do? You invest systematically. Here are the four smartest ways to get gold exposure right now. First, EGR, electronic gold receipts. You buy real certified gold in electronic form through stock exchanges. Pure, transparent, no making charges, no storage worry. Second, gold ETFs, exchange traded funds, bought and sold like shares on the stock market. They are highly liquid, backed by physical gold, and no storage headache. Number three, gold mutual fund. Perfect if you don't have a demat account. You can start an SIP with as little as 500 rupees per month. Let the fund manager handle the rest. And fourth, multi-asset allocation funds. My personal favorite. Now, this is the one I want you to pay extra attention to. These funds invest across equity, debt, gold, and real estate, all under one roof. By regulation, they must maintain a minimum 10% allocation to gold at all times. So you automatically get gold exposure without putting all your eggs in one basket. Think of it like a thali meal. You get the best of everything on one plate. When equity is doing well, you benefit. When gold is rising, you benefit. When debt gives stability, you benefit. And now with real estate investment trusts, REITs, inside these funds, you even get a slice of commercial real estate. One fund, four asset classes, maximum diversification, and all four options, no storage risk, no purity concern, fully regulated, and easy to buy and sell. And they are also SIP friendly. You can start with a little as rupees 500 a month. So start a monthly SIP today, even 1,000 or 2,000 a month. Over the next 12 to 24 months, you will average out your cost beautifully. This strategy is called rupee cost averaging, and it works like a charm in volatile market. Here is the big picture. India imported gold worth $72.4 billion in financial year 2026 alone. Gold loan outstanding in India has crossed 18.6 lakh crore, growing at 50% year on year. Gold is not going away. The world is not walking away from gold. This correction is temporary. The long-term trend for gold remains strongly upward, driven by global uncertainty, inflation, central bank buying, and India's insatiable appetite for this precious metal. So while the crowd is selling their grandmother's bangles in panic, you be the smart one in the room. Correction creates opportunities, fear creates bargains, and discipline creates wealth. Start your gold SIP this week. Choose EGR or gold ETF or a gold mutual fund, or go the smart diversified route with a multi-asset allocation fund. Invest small, invest regularly, stay consistent. If you found this helpful, share this video with one person who needs to hear this today.